back to Trading IQ, where we will learn the unlimited nature of the stock market. This is Saurabh Bhattacharjee, and in today's video, we're going to discuss about a very important company. That is Tata Steel. You might have noticed in the recent news that the price of Tata Steel share has decreased big time, and it is currently trading around 100 or 110 level. And previously it was hovering around 1,000 rupees, right? It even saw about 1,400 or 1,300 price range in the recent past. Now, what happened that the price has decreased so much? Is it something like there was a crash? Well, the company had announced split on July 28th. And what does a split mean? And why does a company announce split? What's in it for the company? What's in it for you? Why it is important for you to understand? So we're going to discuss each and every aspect in today's video. So please watch till the end. Why does a company announce split? What's in it for the company? A company announces split to increase more number of outstanding shares in the market. Now think of Tata Steel share like any commodity, like a phone company, right? Like an iPhone. And due to the huge demand, the company will of course increase its production, right? So it is available to more people, right? And that's how a company gets benefited. Now in the stock market, it is sort of a similar approach wherein the company will decide that the price of a given stock will split into whatever ratio that they will decide. For Tata Steel, the split was 10:1. So if the price of Tata Steel was around 900 or 950, it will be 90 rupees. If the price was 900, the new price will be 90 rupees because of the 10:1 split. Now what happens, like if you bought Tata Steel before the split, what would happen? You'd have to bought it at 900, right? So let's suppose you bought 2 shares at 900 before the split. So it costed about 1,800 rupees for 2 shares, right? Now after the split, the price is about 90 rupees. Now what they are doing with the split is that you will have more number of shares with the same price. Now since the price is 90, you would have 20 shares versus 2, right? Previously you owned 2 shares of Tata Steel at 900. Now you own 20 shares at 90 rupees. So you now have more number of shares. So what a company is doing essentially by doing a split is increasing the outstanding number of shares and to bring in more retail investors. Now the price is more affordable, right, for a retail investor. Now if you thought of buying Tata Steel, say few months ago, it was about 900 rupees, you would think twice. Now since it is around 90 and 100 rupees, you can easily afford it, right? So that is the reason why a company announces split, to bring in more retail investors, to bring in more interest in the market. And of course it is a news itself. So with this news, the price will increase. And after the split, Tata Steel saw about 5 to 10%, around 8% jump in the price. So that brings in more popularity, that brings in more attention to the market. And let's quickly analyze where Tata Steel is at, and I will also show you where my predetermined level is set for this stock. I don't yet own Tata Steel, but I will definitely plan to, but I need it to hit my predetermined level. So let's jump into my screen and analyze the metal sector a bit, and then see where Tata Steel is at in terms of stage analysis, and where are my predetermined levels, and how do I negotiate with the market. Now before we look into Tata Steel, let's first look into the sector first, right? So of course with the bear market, it saw a huge decline from this level to this level, and it is rebounding back pretty sharply from here on. So we had discussed in one of my recent video where we have showcased where the global market was and why it was hovering around a huge support level, and if it rebounds back from that level, Nifty 50 will, of course, Indian market will, of course, rebound back. So Indian economy is currently in a better shape and in better situation compared to the global economy, global market. So of course, it is showing the strength on the chart itself. So again, it is in stage 4 and it is trying to rebound back from its level. So again, we might say that this is sort of a stage 3, an extended stage 3 from here to here, this level, or maybe this is an extended stage 3. This has been a channel for a very long time, maybe from early last year. So, and it is again on this channel. So it is in stage 3. Of course, if we go by the overall market and then the industry, of course, we should not look to buy any stock within this industry. Let me show you why and how do I determine that. So it's pretty easy, right? So this was the level which it saw about in 2008, and since then it never saw this level, right? And it eventually broke out around here. And the recent development was about this level, around this level. So this, I had marked this level, which was around 700. Now it is 75. So my two of my levels are, since after the split it is more affordable, and since it saw a huge rise, I would wait for it to come down to around 90, because 90 was the region wherein you see this was the region where it hit that level, and since then it never saw this level for over 14 years. And when it broke out of this level, look at the grouping of volume. If I scroll down, you see the overall picture of the volume pattern. You see the grouping of volume around this area is quite significant, right? Compared to its past behavior. Like, we have to always compare the current or the volume pattern compared to its past behavior. So here the volume pattern, when it broke out of that 14 years of resistance, you see a good number of grouping. And if you combine all the volume, you'd see that 2 to 3 billion volume in just couple of weeks, in 3 to 4 weeks. And then it came down to that level, right? And now it is up that above that level. So I would wait, since the overall, like, the industry is in stage 3. What happens in stage 3? So you would not know for sure what will happen in stage 3. You would not have that sort of conviction that it would go up, it would go in the upward direction. If it is in stage 2, with conviction you can say that it will go upwards, right? But since it is in stage 3, it might again come back to this level. And if it is, then we would see Tata Steel around this level. So again, if it does not come to this level, I will not buy. After learning so many things from my mistakes, so I did numerous mistakes. After doing all those mistakes, I now have the patience to wait for it to come to this level, or else I'll not buy it. There are so many other stocks that I'll look for, but if I'm to buy Tata Steel, this is my predetermined level, and when it comes to that level, I'll have a buy order around this level. And if I buy at this level, I'll also try to buy more around this level, right? This is how I would buy a stock which is in stage 4. Of course, for a stage 2 stock, you know what to buy, like when it is breaking out of stage 1 to stage 2. But if I have to buy Tata Steel now, since the market is in stage 4 and the sector is in stage 3, I will not buy it around this level. Even I might change my mind if it comes to this level. I might try to negotiate with the market and wait for this level to hit, because this was my previous level and it was more recent resistance level that it broke out of around this area. So the volume picked up around this level and it saw a huge upward momentum. So I might wait for the market, for Tata Steel to come to this level around 75, and then I think of buying. So again, this is how you would negotiate with the market. So there is no one to negotiate with, right? You see the chart and you go into the broker account and you have to do some clicks, and then it's all yours, right? So, but then you have to negotiate with the market like this. So here, who is your enemy in the stock market? Who you are dealing with? You are dealing with yourself. You are dealing with your expectation. So you have to keep your expectation at such a level When the market is in a bearish mood, you have to negotiate with the market. And how can you do that? Just draw a level and wait for it to come to that level, and until unless, don't buy it. Don't buy out of compulsion, because what happens if you buy out of compulsion? You would panic. If the market does not move according to your expectation, you would panic, and then you would take a loss, and you would get out of the stock prematurely. So that's why it is very important to have a plan, and a consistent plan, and then you'll have to work accordingly. I hope you like this video, and if you do, please like this video, share this with your friends and colleagues, and subscribe to my channel, and I'll see you guys on my next video. Thank you. Have a great day. Bye.